Hey, Lauren Andrews here from Dominion Lending Center's Expert Financial, optimalfinance.ca. Today's video, we are going to show you how you could actually build your net worth using reverse mortgages. I'm going to do a series of different scenarios with using reverse mortgages, and this is going to help kind of open your eyes in terms of the opportunities you can actually leverage to kind of take your life in a different path than you ever anticipated that you could. Part of it is really analyzing your particular situation and making sure that it fits. The other thing that's changed in our industry is before, reverse mortgages were only available for seniors. Now reverse mortgages, it doesn't matter what age, there's different companies that offer reverse mortgages, and that's why we're not really connected to any one company. It's really figuring out what's the best thing for you and making sure that we optimize the best solutions and come up with a plan that integrates your short-term goals, your long-term goals, and gets you to where you want to get to. I'm going to talk about Susan. So Susan had just retired from working with the city. Okay, so she just retired working with the city, hadn't worked with the city for too long. She was going to be receiving a pension of $1,500 a month. Okay, Susan had done a great job in paying off her mortgage years ago, had a property in the GTA worth $1.5 million. Her goals, so now that she's retired, she wanted to move up closer to her son in Georgian Bay, closer to the lake, and was looking at purchasing a property of about $800,000. The idea for Susan is that I'm going to sell my property in Toronto and buy that property up there, and I'm going to have some savings that I'm going to be able to draw on that's going to help me with my living expenses and my day-to-day and everything else. By selling her property in Toronto, okay, and if she sold it for $1.5 million after real estate fees or whatnot, so they take about $75,000 after that, out of that, she would end up with about $625,000 in her bank account to live on and pay cash for that property in Georgian Bay where she wants to live. Makes sense, right? So that's the simplest, easiest way to do. And then what she could do is continue to draw on her savings over the years and deplete those, but she'd be able to subsidize her $1,500 a month that she's getting with the city, and maybe take out maybe an extra $1,000 a month for living expenses, and then she can continue. But what if there was another way? I'm going to look at this whole situation. We're going to break it up into a 5-year term. So I'm going to look at 5 years. I'm going to be very, very conservative with these numbers. What if Susan kept that home in Toronto and bought the home in Georgian Bay? How would she do that? She doesn't make any income, she wouldn't qualify. So what we could do is basically we would do a reverse mortgage on both properties to make sure that we had enough money to actually pay for that Georgian Bay property in cash through the financing of the two companies. Recap on reverse mortgages. Reverse mortgages is basically a mortgage that you do not make payments for, okay? The payments are the interest is accumulated within the mortgage, and it accumulates over time, okay? And when you sell that particular property, that's when you would pay the interest and the mortgage all together. People say, oh my goodness, if that happens, eventually not have any value of the property. So let's go with the scenario where Susan sells the house, buys a house in Georgian Bay, pays cash for it, and we're good to go. So she's starting out with a net equity position, $1,450,000. Her $650,000 in savings, plus the $800,000 of property that she has, and that's what she starts out with. So let's fast forward 5 years from now, and let's say she's taking off $1,000 off her savings. If we look at an appreciation of the property, and hey, now they're 20%, 18%, 15%, they're crazy right now, but let's scale it back. Let's say it's 5% is what the property is going to be increasing at. Property value increases, and then she's also has the money that she's taking out. So basically after 5 years, her $625,000 is now down to about $565,000. The $800,000 property has appreciated, now at a value of $1,021,025. That's $1,021,025. That's her net worth after 5 years. She's still doing okay. She'll be okay for a while, and not an issue whatsoever. Let's go to the alternate scenario. Susan decides to keep the house in Toronto and buy the other property. Okay, so now one of Susan's challenges is cash flow. Okay, so she's like, where is my cash going to come from? Hard to survive on $1,500 a month. I'm going to need more. Here's what can be done. So just so we understand. So basically Susan decides to do the reverse mortgage, buy the property up in Georgian Bay. All done. Now, Susan now rents the home in Toronto, gets about $4,200 a month in rent, hires a management company and everything else to take care of everything. So she actually clears $3,000 a month. Now, $3,000 a month is coming in income for her to add it onto her $1,500. So now she just went from $1,500 a month in monthly income to $4,500 a month, probably way more than she needs, but now she can travel, do whatever she wants. Okay, that's just perfect. Okay, but I got this huge mortgage, right? So right now, let's see, by keeping the two properties, okay, Susan's net worth position on those two properties is 2.30 million. So the 1.5 million for the existing property and 800,000 for the other one, 2,300,000. Okay, so that's her net worth position. Let's say Susan keeps the mortgage. We're going to go 5 years down the road. Susan starts off with a mortgage of 800,000 reverse mortgage. What is that mortgage in 5 years from now? Well, actually, that mortgage value 5 years from now, the balance is now 1,117,792. Okay, so if we get all the interest that's accumulated plus the principal, that's the new balance. But wait. Just wait till you see this. Being consistent with our first example, we used a 5% appreciation, okay, of the value of the property. So let's see what happens. Now she sits on $2.3 million of real estate from day one. 5 years from now, you ready for the value? Now $2,935,447,000. We need to deduct what that current mortgage balance is. Current mortgage balance, $1,117,792. That difference is $1,817,655. Okay, but now let's also look at the first example when I gave her when she was selling those two homes. She was taking $1,000 a month off her savings. She doesn't need to do that in this particular situation. We're adding on $3,000 a month instead because she's receiving rent. Over 5 years, that's $180,000 of income that she's received in the rental income over the last 5 years. The net difference when we add up that is $1,997,655. Let me show you these two numbers together. Her net position, if she sold that other house and bought this one, and after the savings, $1,586,025. Net position, if she kept the house, got the rent, bought the other house, used the reverse mortgage, $1,997,655. What's the difference in 5 years? Susan has increased her net worth, has first of all solved her cash flow issues, not depleting from her actual savings, and increased her net worth position by $411,630. $411,630 in 5 years. That is the magic that can happen when you actually can leverage real estate to build wealth, but at the same time, it could fix a lot of other issues in your life as well. Right now, I don't see that there's any real better investment than real estate right now. It is appreciating at a great rate. The demand is there. It consistently is there. And I think that it would be a great opportunity to actually, sit down and come up with that plan. So what is that plan 5 years from now, 10 years from now? Whatever it is. We are here to help. There's a link that you can actually even click on to make an appointment with us, give you some guidance and some reassurance and financial peace of mind for your future as well. Hope you enjoyed this video. We're going to be doing a bunch more. Let me know any comments and everything else. Please feel free. We'd love to hear from you. Thank you so much, and we appreciate you, and we look forward to seeing you on our next video.